What's up, everybody? Welcome to What the Fic. Man, I haven't done this show in a while. Glad to be back. Spencer Israel here with Ian Culley, head of FICC at All Star Charts. Mr. Culley, how we doing today?
Everyone, all right. Feeling a lot better than earlier this week. Feeling rough earlier this week. Lost my voice.
Yeah.
Also, I got just cold going around, that summer cold. I got little ones. They're constantly passing it back and forth. But it's good to have you back.
Good to be back. You sound great. You look even better with that luscious mane, but the people did not come here to talk about your hair. They're here to talk about what's going on in the FICC market. So let's start with our recap here. I guess the first chart is what, gold? That's usually what we start off with. So
yeah, we always kick it off with gold. And hey, the story for gold is those former 2011 highs. Around 1924. That marked the peak of the prior commodity super cycle for gold. So as long as gold is above that level, path of least resistance is higher towards 2,500, right? Gold chopping around this 1975, 1980 level, but finding support around 1936 in near term. So near term support around that level. As long as it's above there, again, shorter term, tactically speaking, the path of least resistance again is higher. GLD, that level is around 181.56. Again, just holding just above that level. If and when GLD gets above 194, I believe it's off to the races for gold and precious metals in general. GDX, as long as GDX is above 30, want to give it the benefit of the doubt. On the other hand, I really want to see GDX back above 33. I want it to see it reclaim this key polarity zone here. If and when it does, I think we're heading back up towards those spring pivot highs from last year around 40, 45.
All right. Crude oil. How are we doing in crude, man? Seems like wait, what is it? This is a monthly? Is that what this is?
No, this is actually a weekly chart.
This is a weekly?
I mean, excuse me, this is a daily chart. No,
daily. It doesn't look as bad as I would have assumed, but
no, still. I mean, the bulls keep stepping in. They refuse to let crude roll over, and that lower boundary of this 8-month range is right there around 65. So as long as crude's above 65, I definitely don't want to short it. Don't want to be short crude. I don't want to short energy, especially as we're seeing that rotation into the more cyclical areas of the stock market. I like the way crude looks. And, look at momentum in that lower pain. 14-day RSI is improving. So definitely not a bearish data point.
But you don't want to be long either.
I don't want to be long either. Yeah, again, I'm new. Yeah, good point. Neutral. Now, if and when it gets above 74, I like it long. You can see there's, short-term resistance here. So potential resistance. If that is, if the bulls do take that out, I do like it long towards the upper bounds of this range around 83. Moving on to copper. Before we get to copper, let's look at USO. USO, I think it's a little simple. It's much more simple. 58. 58 is the level. As long as USO is above 58, I think you can trade it long against that level. And again, like I don't want to be short oil. I don't want to be short energy stocks.
Yeah. Copper.
Worried about copper last month. It was undercutting the pivot highs from last summer around 378. Give it a month. And, it reclaimed that key level. So copper up near $4. I think that's huge, not only for copper, but industrial metals, pro-cyclical commodities, and just stocks and risk assets in general. They call Dr. Copper because, economists and just analysts in general look at copper as if it has a PhD in economics. It's got a really good read on the global economy, and to see the resilience from copper futures, speaks to an underlying health.
Is this because copper actually has like industrial uses as opposed to gold, which is just, gold?
Yeah, this is just supposed to go, because
Yeah.
this actually gets used.
Right.
Gold does not, right? So,
Right.
you pull gold out of the ground and then that supply remains in the system,
Yep.
whereas copper gets used. And yeah, I mean, 4 times the amount of copper used in EV vehicles versus the combustion engine.
Wow.
So, with the talk of Tesla and just all the other automakers now really pushing towards electric vehicles,
Sure.
I think there's going to be a continued demand for copper.
All right. What's this one here? This is Freeport, right? Okay.
Freeport, copper mining bellwether. You had a little failed breakdown here, middle of May, and now it's just been ripping higher. This is exactly what stock market bulls want to see, commodity bulls alike, and it's extremely bullish data point. But it's not just copper. Brought a couple other charts today. Rebar futures.
Yeah.
Similar.
What is it? Explain this to me. I don't know what rebar is. I have no idea.
Yeah, rebar. It's used in foundations. It's the long.
Okay.
Have you ever seen rebar? It's a long cylindrical metal. It's kind of have a little bit of guess kind of a texture on it, and you tie it together, almost creating lattices. You create a lattice.
Oh,
That's what you pour the
stuff.
concrete over, so it keeps the concrete.
Okay. I just Googled it. Okay, that stuff.
That's rebar, yeah.
Okay.
So to see rebar put in a similar failed move on a longer time frame, obviously here, this is a weekly chart going back to 2015, but it looks a lot like this failed breakdown here in Freeport. So to see, industrial metals do the same, and then to see zinc, digging in and resolving higher here off of, a decade-long uptrend line, it's also constructive. So it's not just copper. We're seeing other areas. Tin's been ripping recently. So just, something to keep in mind that it's a little broader than just old Dr. Copper.
All right. Today I learned there is such a thing as rebar futures. Let's move on to fixed income, and then we'll get to the meat of today's show. What's going on in bonds?
Well, rates aren't rolling over. Still sideways. It's still sideways. So it's there's no decisive breakouts across the bond market. No clear indication to get long. Our risk levels are still overhead. So it's neutral on the bond front. And the path of least resistance, it continues to point higher for rates, even though near term tactically it's more of just a sideways choppy mess, which isn't bad. I mean, it seems like stocks are pretty happy with that scenario. And what's interesting, I brought the 10-year yield with the KRE IYR ratio in the lower pane. And we've talked a lot about the dislocation or the decoupling of multiple intermarket ratios and relationships that are tied to interest rates. Now, KRE IYR, regional banks versus real estate trusts, tend to move with rates, right? As regional banks benefit from higher rates. So they tend to outperform REITs in a rising rate environment. That hasn't been the case over the past year. But what's interesting, and what I want to point out, is that notice that whenever the KRE IYR ratio comes down and finds support here, going all the way back almost a decade, it coincides with significant bottoms, significant troughs in the 10-year yield. So when I look at these two charts side by side, I think, hey, maybe rates chop sideways, maybe they continue higher. But what really stands out is that this tells me that the market is ready for whatever is coming down the pipe, whether rates chop sideways or whether they continue higher. So I don't know if you remember back in the summer of 2016.
No.
KRE IYR. I mean, this was an excellent time to buy stocks. S&P 500 ripped with 44% over the following 18 months. 2020, same story. Epic rally. So just something to keep in mind. I think another healthy, bullish data point for stocks. Last but not least, do you want to talk about the dollar?
Yeah, let's do it.
Well, it failed to challenge its pivot highs from March, and it's making its way down to that 101 level, and it's doing it very quickly with a lot of strength in emerging market currencies. Euro's back above that 108 level. That's been a big level for me over the past year or so. British pound ripping higher. So a lot of action in the FX market suggesting that we do have a weaker dollar on our hands over the coming weeks, potentially months. I think that really picks up at downside action. The dollar picks up the pace below 101. And this is a picture. EM currencies violating the CEW ETF. Again, this isn't a trading vehicle. A lot of these ETFs, a lot of these ETNs, and we're getting ready to get into that. I use the majority of them as information. And this is a great example, this emergency currency fund, CEW, violating a decade-long downtrend line. So a lot of headwinds ahead for dollar bulls.
Let's move on to our favorite charts. We're going to do something a little bit different today. If you notice when we talk about any market here, whether it's gold or oil or whatever, almost always we talk about more than one thing, more than one security, more than one way to gain exposure. Because all these markets, all these commodity markets and currencies, there is, Wall Street's an inventive place, right? There are many different ways to get exposure to these markets. One of the more common ways, and Ian just sort of hinted at, is ETNs. We just had an interesting development happen this week where Barclays, the firm that invented the ETN in the first place, like, I don't know, 17 years ago or something, they just shut down. They closed 21 of their ETNs. These were trading instruments that, if you don't know what an ETN is, it basically functions similarly to an ETF, but they're debt instruments, they're notes. That the N stands for notes. They're notes. They're not funds. But if you are an active participant in many of these commodity markets, these ETNs may have been one of the, if not the main way you traded, and they're now closed. They're gone. So now let's walk through this list, Ian. There are other ways to get exposure to these markets, which is what we're going to talk about here now. But here's the list up on the screen. That's actually half the list. The other half
this is the other half here.
It was too big for one slide. Ian. There's too many. So like, what was your reaction when you saw this news?
Well, at first I thought, wow, I can't believe that they're shutting down these commodity ETNs during a bull market, especially when the majority of the individual contracts that are getting shut down, or individual ETNs, are cattle and softs, which are actually absolutely ripping right now. I think the reason they had to do it there was more going on. They had some issues with some faulty accounting. They came up into like crude oil. I think they're crude oil ETN, and maybe a couple of others, so that they just had to pretty much halt operations. Is that correct?
Yeah, mostly. So these ETNs all have like rules that they have to follow, and because again, it's structured in the same way as an ETF, where they still have the creation and the redemption mechanism that basically makes the liquidity of the asset go and keeps it in line with the underlying market. But Barclays had mistakenly created more shares, or I guess more notes technically, than they were allowed to create, and they discovered this a few months ago, so they had to halt the sales of the notes. So basically creating a dislocation in price there. And most of these, we should add, most of the ETNs they just closed were not super active. But I saw Joe on there, JO. That was like the coffee thing. That's how I tracked the price of coffee, right?
Yeah.
So that caught my eye. I was surprised to see that one get the axe. But anyway,
Yep.
if you traded these things, sorry, Charlie, you're out of luck. But let's talk about some new ways to get exposure to these markets if you still want to.
I actually just got a message from my buddy Jay on Twitter, who he was holding the nib ETN for cocoa and did pretty well, and he just actually got paid out recently.
Yeah,
sweating it there for a little bit, but
no, Barclays not going to take your money. that would be weird though.
But he's genuinely bummed because it was a great way to trade a market that's ripping higher right now. So
yep.
Here's first off, let's kick it off with Cal. This one's been delisted. And you know what's interesting about this one, and it really highlights that a lot of not all of them, but you know, a lot of the ETFs and ETNs that cover some of these agricultural commodities don't really react really well. They don't necessarily follow the explosive rallies that we're seeing in the actual futures markets themselves. I mean, take a look at feeder cattle, absolutely ripping over the past 2 years, challenging 2014 highs. Live cattle printing new all-time highs. I mean, this is one of the strongest trends over the past couple years. I mean, it looks like a tech stock. Look at this thing. It's ridiculous. But then you look at Cal, and I mean, this note here, you know, I've deleted this from the commodity deck, but this was straight from the commodity deck a couple weeks ago. I mean, this has been the caption for the Cal ETN for a year and a half, right? Waiting for this thing to decisively take out that 40 level while look at feeder cattle. And again, look at live cattle. So not the best instrument. Now, on the other hand, the Bloomberg ETN, the cocoa, wasn't, you know, look at this. I mean, it's been ripping higher over the past year. So not necessarily a bad instrument to use.
Yep.
I mean, we got the big breakout here in the cocoa futures, you know, violating that decade-long down trend line, going vertical, getting a breakout. You see this breakout here. Still like cocoa futures long, understanding that it's running into some resistance at our initial target around 32, 37. So keep that in mind. I think it's trading around 31 and change this morning, 31.88 as of this recording. So keep that in mind. Maybe a little bit of consolidation here would be healthy. Another one they closed was the ball
cotton.
Bloomberg. I mean, this one, obviously, you can just look at this chart and tell that this one isn't traded. Doesn't have that activity.
No. And that happens. It happens all the time. This happens every single week with ETFs and ETNs. You know, firms launch new products, and if they catch on, great. And if they don't, okay, shut it down. Right. This one is.
What's interesting about that is I think, you know, the word on the street is there's a lot of CTAs that are going to start, you know, bringing their own ETFs to market as this, you know, potential commodity super cycle really starts to pick up. So I think there's going to be some I don't know, competition there for these individual ETNs and ETFs.
Sure. That makes sense.
Cotton. You know, I still think cotton's going to rip here. You know how much I like cotton. Unfortunately, BAL no longer an option. Sugar. I mean, see, here's the thing. Look, SGG, this ETN looked good. It definitely was following the market, following that breakout that we saw in sugar. You know, as long as sugar futures are above 24, you know, you could stay long. Looks like it's trying to resolve from a tight consolidation here this morning, trading around 26.35.
So the bottom line here for all these is you're going to just trade the futures. If you wanted to get exposure here,
it depends. It depends. When it comes to the softs, when it comes to grains, which I mean, they delisted some grain ETNs as well. I want to trade the futures. Yep. But when it comes to some of the metal indexes, when it comes to the physical, when it comes to physical ETFs versus ETFs that are their underlying assets are actual futures contracts. You know, a lot of times the roll structure of those futures contracts gives the ETF a kind of a downward slant to it that you know, if you have a sideways range bound market in the individual futures contract, most actively traded futures contract, the ETF might actually be trending lower. So in those situations, I prefer the futures. So you know, when it comes to commodity stocks or, you know, equities that are related to commodities markets, I far prefer to find individual names, to find companies. So think like ADM, DE, Caterpillar, maybe even some of the I know, was it 2021, early 2022, you had all those fertilizer companies were just absolutely ripping. You know, those are other ways to think about taking advantage of the rallies in the ag sector of commodities.
Sadly, I don't know if there's any individual name or equity, at least for coffee, but we still do have coffee futures. Maybe
Yeah, there was is it Dutch Brothers?
So, Starbucks and Dutch Brothers, but to me that's a hedge, right? Because
yeah, and it's more like they're just bigger services, you know, food and beverage services company. It doesn't really quite capture.
No,
that's a good point.
Wing of Tech in the chat is sort of making my point for me, right? I mean, commodity ETNs, he said, were the first way that he tracked commodities when he started trading. He didn't even know about futures yet. That's exactly true. Futures, many newer retail traders don't even have access to trading futures, right? So, but ETNs are widely available. They may not be liquid, but they're widely available. So,
I've traded Joe. I traded Joe before I opened up a futures account, and UNG. The Natty Gas. Yeah, definitely.
You were a DGen long before you were trading futures.
Oh, got it. I was always interested in the commodities markets. I don't know, for whatever reason, they just, you know, trading corn makes sense to me. I don't know what it is.
All right. Coffee futures. Do we have an opinion here?
Yeah, I mean, as long as it's above 172, I like it long. I think the potential here, like, you know, we've got a little, not a potential. I mean, this was a failed breakdown below this key retracement level, and it's just been ripping higher, series of higher highs, higher lows. The trend is higher. You know, I like it back up towards 224. Absolutely.
Yeah, I always wondered why like a stock like Starbucks wouldn't track the price of coffee, but then I realized, wait a minute, higher coffee prices in theory would be bad for Starbucks.
Yes,
I'm sure they're like also like hedging their exposure to coffee, like the airlines do for oil, right? So
guaranteed,
for sure.
That would be a fun job, right? If you work for Starbucks and you're just...
I was talking to someone at the CMT event. He's a he's a trader for a what was he hedging? Oh crap, I don't remember, but he was a hedger. His job was to get exposure on the other side for his company. Yeah, fun job.
Very cool.
Okay, so that was it for that. Again, there are other ETNs out there still. It's not like they're all gone, right? It's just that this was a decent portion of them. So the bottom line here, there are many ways to get exposure to a commodity. You can do the futures. You can look for individual equities if they exist. Look for ETNs if they exist. Look for ETFs if they exist, right? There's lots of different stuff. So okay. Do we have what else do we have? Do we have like a final trade? Is that what we're up to?
Well, just more of I brought the South African Rand with me today.
Why?
You know, just kind of as, you know, a reminder heading into the weekend. We got a long 3-day weekend ahead of us. And you know, the closing price today is like, you know, I think it carries a lot of weight. Was it quadruple witching today as well?
It is a quad witching.
It's a quad witching.
There will be some fireworks at the close, no doubt.
Yeah, and you know, we got a 3-day weekend, so you know, we're going to see what investors are willing to take with them over the long weekend, what risk they're willing to carry, which is always important. But you know, earlier in the spring, we saw that dollar strength, and it was bouncing higher, and it's heading back up towards the March pivot highs. We're like, hey, if you wanted to get long the dollar, we want to get long the dollar versus the South African rand as it breaks to new all-time highs. And it did, right? Now, as the dollar is starting to roll over, we're getting a failed breakout here. However, zooming in, our initial target was up around 1975. Like, we wanted to get long above this 1858 level. So just a reminder, heading into the long weekend, and just, just in general, like, it's always good to take profits at targets, right? I know we want to let our winners run, and it's really hard to do, but it's also really difficult to take profits when you're making money. But whether you take all the profits or 50% or whatever, however you work that out, I mean, there's nothing more gangster than taking money off the table. Nothing more gangster than booking profits. And, this is the logical level to feed the ducks, and it turns out it worked out for us.
I always have had a harder time selling winners than selling losers. It's easy for me to cut a loss. It's been always hard for me to cut a winner. You know what I mean? Because you want to let it ride. We had a couple questions from the chat. Nikki asked about lithium. I'm not sure if you look at that ever or at all. Maybe we can pull it up either quickly today or for Wednesday's show. And also Jay says, would love to hear about how to get started in futures. If y'all are down with sharing with steps to get started, it is a bit overwhelming. I agree, it is overwhelming. I don't even trade futures myself. That's how overwhelming I find it. But Ian does. So Ian, we should do like a series.
We should
on how to actually get started, how to trade futures, and like what software to use, what brokers, symbols, et cetera, et cetera, et cetera.
I would love to do that. I'm going to put together some documents running through all the different contracts. What are the most actively traded contracts throughout the year?
How does a futures contract even work? What does it mean?
How does a futures contract work? Exactly. Getting into brokers, how to choose a broker, all of that jazz. Some of my favorite books regarding the futures market. Jack Schwager has an excellent book.
Sure.
I'll have to pull it off the bookshelf next week and share it with everybody. Also, I do have a lithium chart for you here in just a minute.
Oh, lithium. And then what we'll do, because the show does air every Wednesday and Friday, what we'll do is I'll make a note, palladium, which we have discussed. I don't think we have the chart today, but we'll talk about palladium, Jonathan, on Wednesday's show, just so we can sort of get ahead of it. So I'll make a note. And I'll message both of us right now, Ian.
Palladium looks like it's bouncing back. And what's really interesting is I had an email from one of our readers last week responding to the recent post on Palladium. And he was sharing an old post from JC.
Oh, yeah, I saw this.
An old post from JC that was from Bartolone, and it was this is from like 2011, and it was all about the correlation between palladium and the Nasdaq tech stocks. And believe it or not, they have a really, really strong correlation. And I don't know. I think the strength in technology could be pointing higher for palladium, but we'll get more on that next week.
All right, real fast. Lithium, LIT. Let's get up on the screen. What do you got here?
I want to see it back above 68. I know it's messy, but I want to see it back above 68. It looks like it's trying to carve out a near-term bottom here. But again, above 68, I like it long towards 100.
There we go. All right, Ian Culley is the head of FICC at All-Star Charts. He is part of the team that is scouring the markets and the interwebs every single day to find you the perfect chart, the one perfect chart for that day. I'm talking about the chart of the day email. This is a totally free email that, again, people like Ian, people like JC all have their hands in, and they send it out every single day. If you want the All-Star Charts chart of the day email, there's two things you can do. There should be a link. Let me check on the link. Is there a link in the Description. No, there's not. I don't know why. My mistake. If you want the email us questions@stockmarketmedia.com and just put chart of the day in the subject so I know what you're talking about. Or you can always call us if you want. The number 323-421-7910. Drop us a like on YouTube. We'd appreciate that. And also, we keep talking about a long weekend. Ian, not a long weekend for you, sir. Because aren't the futures markets open on Monday?
Some of them are open.
Some of them are open.
All of them.
All right, then I expect to see you trading on Monday.
I'll be here.
I'll be here. All right, I won't be. All right, everyone. Have a great weekend. Happy Father's Day. Thanks for watching. See you next time.
See you guys.